We'll also be covering how much money you need to retire, taking into consideration your home costs. So let's get right into the calculations. Welcome to the tutorial portion of this video where I'll be going through the calculations in detail on whether it is more worthwhile to make that extra prepayment towards your mortgage or to invest that money into your retirement fund. So let's get started right away. Just some housekeeping here. How this template works is you would need to complete the cells in green. I have pre-populated a couple of them just to make things a little bit faster, but you would need to update these cells yourself in order for the rest of the template, which is in gray, to automatically calculate. So let's go over the assumptions because that's going to determine whether it's going to make it worthwhile or not. So the first assumption here is how much money you have set aside for this particular purpose. So let's say that you have $20,000 sitting in your bank account, and that's the amount that you're determining whether to prepay your mortgage or to put it towards your retirement fund. The second cell that you need to update is your annual living costs. So this is excluding your mortgage. So on an annual basis, how much are you paying towards groceries? How much are you paying towards car loans, other loans you have, other expenses that you have, etc. Let's say in this case, it's about $2,000 per month or $24,000 a year. And then you also need to update what your remaining mortgage amount is. So at the time of renewal, how much left do you have on your mortgage? And in this case, we put down $350,000. And this is also an estimate, but what is your expected mortgage interest rate? The annual rate here is 5.5%. Another assumption that we need to make is your investment rate of return. This is also an annual rate, and we put in 7%. Feel free to put down a more conservative amount like 5% or an amount on the higher end like 10%, but this is just an estimate for the time being. Also, your mortgage renewal date, let's say, is just around the corner on August 1st of 2024. And then you also need to input your current age. So let's say that you're 30 years old and how many years you have until retirement. So let's say that you hope to retire in 20 years, which means that you are 50 years old. Now, there are other assumptions made on this template. And the first note here is that mortgage payments are made on a monthly basis. I know that there are other options like bi-weekly, etc. We're just going to go with monthly because that is the more popular option. Note 2 is that investments are also compounded and contributed on a monthly basis. With this, I know that there are other options like daily, weekly, monthly, annually, etc. We're just going to keep it super simple and stick with monthly. However, if you like to change this assumption, you're more than welcome to go into the tabs and change it based on your liking, whether it's bi-weekly or annually, whatever the case may be. If you are familiar with Excel, for the time being, the template has been automated for monthly.